Ladies and gentlemen, please take your seat as we are about to start another insightful session, the future of regulatory landscape locally and globally. Please welcome on stage Eugenio Accongiagioco, Managing Director at APAC Management Consultancy. Please give Eugenio a warm welcome.
Hello. Good. Hi, good afternoon. My name is Eugenio Accongiagioco. I am the co-founder of APAC Management Consultancy. We do licenses for the CFD and crypto industry and acquisition in the industry. And I ask my guests to introduce themselves.
My name is Tony Petrov. I'm Chief Legal Officer at Sumsub. It's a KYC provider, so we provide technical solutions for all kinds of compliance problems related to client customer onboarding and later life cycle of your customers.
I'm Melody. I work for a law firm called Sophie. We provide compliance, legal, and licensing services for financial service providers. Our clients include fund managers, CFD providers, and basically everyone in the financial service industry if they want to get started in Australia. We also advise on anti-money laundering and related issues.
Hello, everyone. Thank you, first of all, for the welcome and for having us here. I'm Evdokia. I'm coming from SALVUS funds. We are based in Cyprus, and we cater for licensing, regulatory compliance, internal audits in all verticals, including brokerages, investment firms, payments, crypto licenses. And I'm happy to share more insights within this panel of updates and what's going on around.
Thank you. So this panel is a good opportunity to test the pulse of the regulatory landscape. So we do it here, at least in Asia, once a year. Every year, there are some new changes introduced by lawmakers and regulators. However, some of these new regulations are welcome, and some other, they tend to complicate a bit too much the life for CFD brokers and also crypto providers. So I wanted to ask you, what are your views in this, particularly if you can mention a specific case of regulation that in a good way or in a bad way or both has affected your company or the service you provide to your clients in the compliance space? Maybe starting, yes.
Yeah, sure. That's very interesting question, I will say. Well, licensing, it's always a hot topic in all expos, I will say, because every different period we have new trends and things are changing. Mostly in the CFD brokerages, after, I will say, SVG announcing all the exits of the unregulated brokers, we have helped SALVUS many brokers going into the regulated space, or they go through the same setup as SVG with St. Lucia, Anguilla, and all of that. However, we see a lot of stands going to the regulated path, and this is mostly from payments. Because if you set up your brokerage anywhere, but you don't have a payment and a banking, then...
Maybe let's explain for a second what happened in St. Vincent. For those in January this year, right? They issued this notice. Maybe let's explain for a second what happened.
Yeah.
What was the change? Yes.
Definitely. The change here is that until today, we had SVG catering, let's say, a company, setting up a company, getting a legal opinion over there, and they were operating, in a way, an unregulated business on Forex brokerages. But then the regulator came up and said, if you are dealing with Forex, we want you to ensure that you have one license in the jurisdictions that you are operating. Few firms, where they operate globally, they could manage to keep their license giving these letters. However, the majority of the business over there are not there for license from regulations. So they had to find another jurisdictions, or they go through the regulated path.
Yes.
we have seen both of them. So some people, they still want to do the unregulated path because it's cost effective for them. But in the long run, if you want to still operate and grow, you have to go through the regulated path. And this is, as I said, mostly for banking, because it's very difficult to get a bank relationship without having a license. And also, if you want to grow as a business, you have to go get a license. You have to show that you are reputable, you are not going to abuse any client's funds, and all of that.
Yeah, I remember because also my firm dealt a lot with this. One thing that was kind of funny in a bad way was the fact that we were asking to the local regulator, okay, you wrote this notice about Forex. What do you mean by Forex? What is Forex to you? And they were unable completely to answer what Forex was to them. They just said, no, whatever you do that we don't understand, you need to get this license. Sorry, go ahead.
Yeah, I agree with you. So that's one of the things that occupied most of the last 6 months, I say. Then we have also crypto, which became regulated right now through Europe with the MiCA coming up, implementation next year, which seems long, but it is not. And for myself, coming from Europe and from Cyprus, I say that SciSec already has the implementation of most of these regulations covering the MiCA. And we already licensed, got the registrations for many firms. I say that many global brands already are in Cyprus, including Binance, Revolut, Crypto.com, and all of that. And I will expect, to be honest, to still have replicate the brokerage of SciSec success into the crypto space. However, this is a very big subject where we are going to talk about it further even when we go to Cyprus, because we are going to see also the replication maybe from ASIC or from Singapore and other places where they replicate what Europe is doing in a similar way. So we have, in a way, a uniformity of the regulations across the globe, which makes sense. Yeah.
Okay, thank you. So just to repeat the question, what is it that which regulatory changes in the last year have affected in a good and or bad way
how we provide services. So the biggest thing in Australia currently is the design and distribution obligation. It's a game changer for how regulation is imposed on product issuers and distributors. I think since early this year, ASIC has said that it's one of their top priorities for enforcement actions. And actually, there has been over 30 stop orders imposed on product issuers and distributors, and 2 of them were imposed on Australia-regulated CFD brokers. So when a stop order is imposed, you can actually issue a contract for a maximum period of 21 days. We have assisted a lot of CFD providers in implementing the design and distribution policy. And yeah, that's the biggest thing in Australia.
Can you just explain a bit better about the stop order? So what is it that ASIC is demanding?
Yeah, so it basically asks distributors and product issuers to proactively think about the financial needs, situations, and objectives of the clients being targeted. So it basically shifted obligation from a consumer needs to read the disclosure documents back to the service provider.
Okay, thank you. And in terms of, you represent a eKYC company, so same thing, regulations is, let's say it touches you in a direct way for the service you provide, but the eKYC itself is not, let's say, a licensed company.
Yes, this is actually a very typical question when the customer comes to us and asks, do you have some kind of a license for doing this or something? And this means that then you need to start all over again describing what is going on, how exactly KYC works, and how it's regulated. So in terms of the regulation of KYC, we see a lot of changes this year, especially in Europe. when we see actually that many countries started doing, creating, let's say, regulations and rules for non-face-to-face identification specifically, how it should be done in specific countries. Sometimes it comes with certain, let's say, quasi-certification of a service provider, which means that you need to either provide some evidence that you have, let's say, audited the service provider in a right way, or let's say there is a formal certification of usually software security with a service provider, which has nothing to do with specifically the quality of non-face-to-face identification. But since for the most regulators, they don't see the difference between software security and the let's say accuracy of non-face-to-face identification, they think that this is something close to each other. What is also important to understand is that FATF has issued guidance on digital identity verification, and it goes, I would say, in unison with the recent, let's say, jurisprudence of FinCEN in the United States that say that it's not enough just to verify identity of the person, but also you need to leverage all the information that you collected from the person to make sure that you are not fooled by the customer in terms of where the customer comes from, let's say, for example. So you need to check, for example, his let's say IP address and make sure that the IP address is not fake. And then you need to check. It's good to check geolocation, and then to use AI, for example, for transaction monitoring. And you need to use technologies for, let's say, checking of your legal entities. If you are B2B provider of something, then it's good to use special technologies for verification of legal entities instead of doing it manually. So these things, I would say, are the most important. We are waiting Cyprus to issue finally some rules, some reasonable rules for non-face-to-face identification, because right now they're a bit outdated. And in Australia, of course, I would say there is also a problem of two sources of information that should be there. And you know, when you work, for example, with Egyptians or I don't know, people from some other regions, you could have problems even with one source of information to check the person against. And so, you know, in my opinion, it would be better to use other ways as well in terms of non-face-to-face identification. Otherwise, probably this would cover most of the things that are important right now.
Thank you. But correct me if I'm wrong. In most cases, even when, I mean, this is all based on principles. Even when there are these rules that are set, in the end, it's still principles. The real test ultimately is always only when you get the inspection from the regulator, and the regulator says, okay, you did it in a proper way. I'm happy with that, because it depends not only on the systems that you are using, but also on how you made your checks depending on the various jurisdictions you were onboarding from.
Yes, here you can actually use different ways how to make sure that your client is happy with the regulatory side of your solution. One that we use is legal opinion. So for example, we obtained a legal opinion from the German law firm, quite famous in terms of that we are compliant with the German BaFin regulations. And we probably will do the same with other jurisdictions as well. And we also, we have another thing. We also have what is called, let's say, checklist. So we collect all the necessary requirements in the specific jurisdiction, and then we provide the line-by-line explanation how exactly we implement this regulation. But otherwise, of course, otherwise we expect, of course, the client to have prudent and experienced compliance officers who know all these requirements. But in most cases, unfortunately, or fortunately, we need to explain more.
Let me, if I can add here, from our point of view, where we deal with these compliance officers, I will say that Sumsub and all the KYC softwares are in the position to say, we provide all the capabilities, we provide the software, but we require the firm to have the responsibility because they have it. So it is essential to train the compliance officers, the management to use these tools, and especially also the back office, because it's not the AML officer who is actually doing the checks, it's the team in the back office where they are verifying the customers. So they have the responsibility, and then the AML officer has the responsibility to train them, to make the procedures and the guidelines. So I will say it is down to the firm to become educated, of course with the help of the provider, but it's not the provider who is actually going to draw all the lines there, to draft the policies and actually do the checks. And when we come through the inspections, that's the difficult part, where we have the ignorance of what they do, and then they say, let's call the technology provider to guide us, but that's not the idea. You have the obligation. And we see, if I can end that here, we see that in Cyprus and in other jurisdictions, maybe they cannot here, we have a lot of people competent, but we don't see a lot of training for those people in the industry to do the ongoing, which is essential.
We are just, I would not advertise that really in this session because it would look that we are supporting this session somehow, but we are actually launching trainings of our platform very soon.
It's okay. If you advertise too much, I'll just shut off the microphones.
Sorry.
I was going to add to the point where you said about training. In Australia, where when you apply for a remittance or digital currency exchange provider registration, now AUSTRAC, which is the Australian regulator, requires you to complete training and sign up for KYC providers transaction monitoring programs before they give you the final approval. So it's quite important now.
You mean at the financial services firm level or at the eKYC level? To get
the independent remittance dealers.
Okay, sorry. Okay, yeah. Okay, got it. Yeah, no, I see also there are some jurisdictions that they actually kind of issue pre-approvals for example, eKYC provider. One we deal with is Mauritius. So Mauritius, in some cases, when they issue the license for the eKYC providers, they want to pre-approve certain providers so that they know more or less what are the standards. So it's that is changing. And to that effect, so talking about offshore, in the last few years, we have seen more and more brokers, even those brands that initially thought that it would be a bit dodgy to go offshore, but now everyone is going offshore because on one side there is the requirement to onboard international clients in a place where they can offer better condition compared to the restrictions that they have in-house. But then we see that this is now evolving to a point where not only there is not only just an empty shell there, but there are actually offices and staff offshore. So how do you see this process also from the onshore regulator point of view, seeing these companies onboarding international companies, international clients abroad?
Okay, so I will say it's nothing new in my view, because once there is a regulated broker, they can outsource quite few of the functions. One of the functions is to outsource the technology providers, or they can also outsource some of the functions of customer support. Still, we have a lot of people in the reputable jurisdictions, Cyprus, Australia, Singapore, and all the other places, where we actually have the need to keep the competent staff in terms of, handling the management, the risk management, the compliance, and all of that, which I don't think that they actually outsource it to the other jurisdictions. The persons that they outsource, I can see the need for, let's say, lowering the costs on the customer support side, which will effectively be the replacement of thereafter from the AI. But I don't see the problem here as long as the calls that they make are according to the regulatory provisions and according to the scripts that are approved from the management. I say that there is job for everyone, always, as long as the firm is doing enough to protect the reputation of the firm and the investor protection side, to give them the appropriate advice to their products, to their issues, how to manage the platforms.
Thank you.
For Australian brokers, everyone knows that because as it stated, you can't onboard an overseas client unless you get a legal opinion saying that you can do so, basically based on a very reverse solicitation model. And that model needs to be so passive that it's just easier for Australian brokers to have offshore licensing and have a separate team to run their offshore clients. In terms of having offshore centers that also service Australian clients, it's quite a tricky question where there's not a straight no, but there are a lot of compliance, basically requiring offshore centers to be in compliance with Australian standard, such as the staff members need to be RG146 qualified, the marketing materials needs to in compliance with Australian laws, and also the distribution of the product needs to be in compliance with the design distribution obligations. So I'll say it's difficult to run an offshore call center, but everyone is getting it.
Yeah, I would just say that, yeah, we also see this among our clients, that they are opening up in offshore jurisdictions. I would say partially it's connected with the thing that, so like they have, let's say there is some kind of tier 1 jurisdiction, type of jurisdiction where you have specific regulations for a specific country, and then there is like a huge amount of countries where there are no regulations, but you have customers that are coming from these regulations, and then you are just let's say choosing some kind of a global license, so the place where you would, let's say, land all these customers in some uniform way. And then the problem is how to, let's say, implement a good, decent level of onboarding and KYC. It's our job, again, when you are landing these customers in this jurisdiction. Sometimes we see that right now offshore jurisdictions are already implementing some regulations in terms of compliance, and so the level of compliance, the level of KYC in offshore jurisdictions is not that different than the general approach. There is some standard that we consider, for example, in our project as a standard way of KYC that is applicable mostly elsewhere, and so only for certain jurisdictions, let's say in Europe, you have certain differences that you should add there. But for global license, let's say this standard way of KYC would be relevant.
Okay, thank you. Another phenomenon we've been witnessing is the blurring lines between CFD providers and crypto providers, in the sense that there are more and more CFD providers that are adding crypto services, not only in terms of CFDs on cryptos, but now also in terms of actual trading of, so acting as a crypto exchange, or even accepting like USDT payments directly without going through the payment service provider, so through their own e-wallet or as a custodian. And in the same way, we have seen some crypto providers trying to add CFDs to their own offer. So sometimes with the same brand, with the same company, in order to leverage on their existing brand. However, this sometimes create issues with not only regulators, but also their own providers, as liquidity providers and bank providers, because they consider the two businesses at a different risk ranking. How are you? What are your views on this?
I will say that it's true what you are talking about. Then there is a need for, I will say, adding more products. People get used to CFDs, and the CFD providers, especially now we are running in a low volatility period, so they try to find out what's the next thing For example, last year, we've seen, last 2-3 years maybe, we've seen a lot of flow of adding products of stocks. It worked out for some others. Now, since we have officially launched products like crypto, and I would say because of the war in Russia as well, crypto are very, very needed. And there is a lot of cost also on charging the cryptos. Since the firms, the safety providers, they have actually the same people for the same need, why not to have the capabilities to offer them the three verticals, which the three verticals, in my view and experience, are the CFDs, then the cryptos, and also the payments, which that's the most interesting fact here, because we see a couple of good groups now where they are entering the three verticals altogether. And the payments is one of the burdens of the CFD providers. They spend millions on payments. And they think of why to pay these millions on the payments, and since I have the money, not to go and get a license and become now a PSP, I become an EMI, and I serve myself and also get customers, because I'm doing the same branding essentially. And we will have also ending up with the crypto. And from our side, we see these groups getting the 3 licenses. There is a lot of need. Fortunately or not, in Europe, because of EBA and the European Union in general, they are more strict on giving licenses of payments.
Microphone a bit closer.
Yeah. And payments and the EMIs. I understand there is a limitation. Not everyone has to do payments, and the safeguarding is essential for them. So they try to monitoring, and it's not the same of giving licenses to everybody. But essentially, it's somewhere where we see the expansion of the products into more products of an opportunity and essentially lower cost, because more people entering into having all of those verticals and can justify the lowering cost. More people that will come there.
Thank you. Yes.
I think from a risk management perspective, it's not good to put the 2 businesses within the same entity. There are some interpretations in Australia currently treat some cryptocurrencies as derivatives. So there are players that do crypto exchange via their market making licenses. The thing is, when one of line fail, the other CFD line also will fail because it will lose the license. So I think it is from a risk management perspective, you shouldn't do them together. The other thing is, if you are a market maker, you can run both CFDs. You can also do digital currency exchange. But if you do crypto assets, your banking relationship in Australia might become extremely difficult.
Not only in Australia, it's everywhere. It's just considered in a different way, yeah.
Yeah, so if you lose your bank account, it will also lead very negatively impacts on your CFD deposit and withdrawals. So I don't think it's a good idea. And especially in Australia, CFDs and crypto assets are the top 2 priorities for enforcement actions this year. And this year we have seen 2 market maker license in Australia fail because of the crypto asset issues. So yeah, that's my view.
You mean that 2 licenses were revoked, or there were applications that did not go through because they also wanted to do crypto?
Yeah, one was cancelled. The other one was voluntarily given back to ASIC because, they run digital currency exchange platforms and there are compliance issues, so their license was basically gone.
But even if you put several licenses, like also you were mentioning payments and crypto and CFDs under the same ones, shouldn't there be some kind of, let's call it Chinese walls between different departments of the same company, so that in theory they do not speak with each other in a similar way as it happens when a company wants to offer, for example, execution-only service and financial advice, discretionary financial advice on the other side?
But they don't do it through the same brand. It's different companies.
Yes, so that's the thing, that sometimes they try to...
No, that's not allowed
okay,
anyway.
That's good, okay.
But the Chinese walls that you say, let's say if I'm in brokerage and I have investment advice, I have portfolio, I do market making, then of course you need to have the separate departments and all of that. What I'm talking about is we see very big groups, where they all, it's like the thing of getting the different licenses in different jurisdictions, because each jurisdiction has different unique things to meet, either the leverage or the payments or the people where they trust. Now, nowadays the trend is not only having the different licenses in the jurisdictions, it's also to get different licenses in the different products. I get an EMI for the payments. I call it ABC. Then I have the brokerage, CD, whatever. And the group benefits from having the clients, and maybe we come up with the different apps where they have in the open banking and they serve them the different products.
Thank you.
Yeah, I mean, I agree that, of course, I mean, from the risk management approach, it's important to put your eggs in different places, right? Although we see the example of FTX, they created a legal entity for each specific, I don't know, thing that they had in mind, and it created just a huge amount of mess. The problem, of course, is that when you have different entities with different licenses, the problem is that sometimes your customers are just the same, and so you need to manage correctly your customers, and this again goes to KYC, obviously. A butcher is talking about the meat. So KYC is important to manage your clients, your customers in the correct way when you're having several different entities having these customers. And for that, we, for example, use shared KYC schemes, so that it would be in the right orderly way when you share the KYC information from one entity with another entity. And you can also use some reliance schemes, which is also quite interesting approach to make easier the life cycle of the client in your ecosystem that you are creating with all these legal entities.
Thank you. So one of the big buzzwords in this year is, of course, AI, as long as neural networks and so on. So this is something that has been existing for, I don't know, 20 years. In my previous life, I used to do algorithmic trading with neural networks and these kind of things. So it's been always around, but this year everyone talks about it. Countries start regulating, issuing laws about AI in general, not specifically for financial services. Actually, that will be my question. So, and there are so far different approaches. Now Europe just issued legislation about AI in general, and US has some, Singapore also. So it's interesting also to note the differences, because Singapore is extremely practical and pragmatic. European is very bureaucratic, strange. And while USA, the approach is more scientific in the way they wrote the laws. However, more and more fintech companies are introducing AI. We should expect soon that we will have the first issues, for example, data about clients that might be shared in a common cloud, and then there will be some breaches of data laws. So in your own jurisdiction, do you foresee any regulations coming soon specifically about the use of AI in financial services, or do you think that this is still far away to come?
Well, coming from Europe, to be very honest, I'm not aware of such laws. However, I know there is a lot of lobbying about regulating technology providers, which is still under discussions. So from discussions to become a law, we may have like 5-6 years of window to actually materialize this, which from one side, it makes sense. So if I'm a technology provider, I have to kind of being regulated to have certain rules, securities, and all of that. But we have to remember, though, we have also GDPR, which is a very big thing. Many companies were penalized, but from our experience, most of the companies, they are doing nothing about it. And this is where the AI may create more problems in the terms of GDPR. From the other side, AI creates a lot of good capabilities and openings in terms of you can create a better customer servicing, and instead of having people training them to answer questions, you do things automatically and gives accurate answers all the questions instead of trying to figure out whether this is correct value to do it. And yeah, and I don't know if the other jurisdictions are actually having things in place for regulations. I'm not aware of.
I'm not aware of any specific laws or regulations in Australia, but it's mostly governed by the particular scenario that the AI was put into use. So if it's in financial services or data, there probably be existing laws on privacy and cybersecurity that will be applicable to the particular scenario that was being put into use. Or I will be interested to see the use of AI in compliance, for example, doing marketing reviews, or if for financial service providers, maybe put them into onboarding centers like phone calls with the clients where you just ask basic KYC questions. It potentially can have some risks in terms of if the algorithm runs wrong, but human errors are also happens every day. So yeah.
Thank you. Yeah, I guess you are the most. I mean, in your industry, AI is the future.
Yeah, I mean, obviously we are already using some AI technologies in our solution, and which is quite sensible because, I mean, we're not using small Smurfs that would push the carriage forward, somewhere under the surface. No, we're using AI, of course, but definitely this should not mean that we can put all compliance procedures as AI, because then basically the problem will be that there will be nobody responsible for it. The main thing about compliance is that you always have some person behind the scenes who is responsible for the process. If you put AI there, then there will be nobody responsible, and then this will be the brave new world where I mean I wouldn't be happy to be there. Another thing which is important to understand, everybody is asking, what will happen after this AI act in the EU? How this will affect the market, etc., etc. Everything is very simple. The same what happened with GDPR. So basically, GDPR just created the new vertical in your company. So you have the data protection officer, and you have many officials who are responsible for these procedures, writing policies and making sure that they are implemented. Just the same will happen with AI. So it will be another vertical of bureaucracy that you will need to create.
Thank you.
More work for us, I guess.
Exactly.
Okay, I think we only have a couple of minutes left, so I was just wondering if there is any question from the public at all. Not at all. Okay, okay, then everything is clear. That's good. Okay, so I just wanted to thank all of you for being here today.
We thank you.
Thank you very much.
Thank you.